Hey everybody, this is Jim at SP500chart.com. It's April 30th, 2017. Tomorrow's going to be May 1st, and we're going to start a new week in the trading of the S&P 500. So we're going to take a look at what happened last week, see if it gives us any hint as to what we can expect for the first week in May. Before we take a look at this, I need to remind you that the website and the video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I control lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. We did have some interesting things happen this week. And the most important thing we see on this 30-minute chart, and that is we had been looking at an inverted head and shoulders pattern. You'll actually see the whole thing a little better here on the 1-hour chart. There's the left inverted shoulder, the inverted head, and the right inverted shoulder. Now this right shoulder went a little bit lower than what I thought it would, but it did not go as low as the head, so I think it still qualifies. This week, we actually broke out over that neckline by a little bit on Monday. By the time we got to Tuesday and Wednesday, we were above our 1% breakout line. Now, if you're willing to commit that to memory, then I will tidy up the chart because that's not a trend line. This is just a line that is 1% higher than our neckline. So we did satisfy that requirement. That means that we now have, in addition to our 2468 target that we've had for more than 10 months, we now have an intermediate target of 2429. And so therefore the week was interesting. Remember a couple of things coming into this past week. First off, we'd already seen one descending wedge break out really quickly. Typically you get 3 tags on each of your support and resistance lines in a descending wedge. Here we got 1, 2, 3, 4, only 2 on the top and 2 on the bottom. This one is more typical. 1, 2, 3, 4, 5, 6. Usually you get 6 turns. This one only had 4. But this one did what it was supposed to do. That is, take us back to where we were before it formed, around 2376. This one did what it was supposed to do, which is take us back to where it formed at around 2377. And both of those worked out perfectly. In addition to that, we got over this neckline, and that's where we get that intermediate target of 2429. How do we get the target? Well, you look at your neckline, you look at the depth of the head, right there. You start at where the deepest part of the head is, measure up to the neckline, stick that line right up there on the spot that you broke out above that neckline, and there's your 2429. That, friends, is really the story of the week. And I believe now with this move above that neckline, I believe this will likely be the what am I trying to say here? The first sign that we are ready to go up and make a good run at that target. Now remember, this line will be resistance in all likelihood. This is the fairly large. Well, see, when I go to that 4-hour chart, it just goes all to heck, doesn't it? Let's go to the daily. That is a fairly large ascending wedge right here. And I think if we get up and back test that line, then this wedge should be sending us back down to the low 2100s eventually. So I think that's going to be a real interesting situation if and when we back test this line, especially if such a back test were to take place in the process of meeting or even exceeding our 2468 target. So this is an interesting chart. Now I'm going to do one more thing here kind of live. As I look at this, I talk about this being an inverted head and shoulders pattern. There's also maybe another possibility. If we draw this line underneath the last two lows, I'm just kind of wondering what happens if we extend this line backwards. Edit it, extend left. Let's go ahead and make it gray as well. And now we'll go to an hourly chart. A person could also potentially make the case that after we worked our way underneath this line of support here in that rising wedge, that we, instead of making an inverted head and shoulders pattern, maybe instead we made a symmetrical triangle. And if this is a symmetrical triangle, then we measure it a little bit differently. We would go to the height of the pattern right here, go to the spot where we broke out, and that would give us an even higher target. That would give us a target of about 24.52. I tend to want to go with the thing that we've been seeing the most of, and that is we've seen a lot of inverted head and shoulders patterns in the S&P over the past 7 to 7.5 years. So I'm going to stick with this interpretation. For one thing, again, historically we've seen a lot of these, and second of all, the fact is that this is a little bit more conservative of a call as well. So I'd rather say that the intermediate target is up here at 24.29, 24.30, as opposed to being too much higher than that. Again, it's sort of a moot point because 24.68 is still a target. So guys, it just looks like we are in the process of making that target, and the bullishness of this market has been pretty relentless. It is not going to always be that way. And I'm personally, when we make that target, if we do, I'm assuming we will, because we have, the odds say we do. But assuming we make that target, if we then come back down and really get down to the low 2100s, then that's time to probably be very open-minded about what direction the market may be taking, because we're sort of due a significant corrective move, and we haven't had one in a while. If we look at the 5-minute chart here, we only saw really one very small pattern develop, and that was on Wednesday and Thursday. That was a very small descending wedge that broke out on Thursday, and now it looks like since that breakout, we've just sort of been in this little melting back down. You may ask yourself, what is this green line right here? This green line used to be resistance. We blew out over it earlier in the year. We got back under it again. Let's look at it on an hourly chart. This was resistance. It was a channel, in fact. If we go to a daily chart, you can see there's a channel. Support, resistance. And what happened was we blew out over resistance. That's when we started this sideways action, and that's also when we got back underneath this line, which is not unusual. When you take out a rising line of resistance, you can't really expect it to behave as support. Always remember that. Descending resistance, when you take it out, often converts to support. Ascending resistance, it just doesn't do the same thing. So there you have it. There's not really much to say about the 5-minute chart here, other than there was our gap up on Monday, second gap on Tuesday, the bull descending wedge, small, very small pattern, but that pattern alone tells us we should be coming back up to give 400 a challenge here. So that's sort of what I'm expecting to happen in the week ahead. So guys, there is your video for the week. that ended April 28th, 2017. The story here is breaking out over the neckline of this inverted head and shoulders continuation pattern, thus establishing an intermediate target of about 24.29, 24.30, which heck, if we get up there, 24.68 seems like it should be right around the corner. So guys, there's your video. I want to thank you for taking time out of your day to watch it. And as always, I want to thank you for your very kind support. Take care.